trades. More in just a bit. Manoj, Murlidharan, Vice President, Derivatives and Relegate Broking is also with us. Manoj, good morning. Good to have you with us here. So, how should one trade markets, and which are the F&O stocks which are tradable?
Good morning, Prashant. Prashant, most important thing when we start a new series is just looking into the amount of positioning what the Nifty has, the Bank Nifty, and how the FI are playing at least in the new series. Now, if you see, the Nifty is lesser by 17 odd lakhs versus what we had seen in August. So we're starting the September with almost 1 crore, which used to be around 1 crore 17 odd lakhs. But the irony here is the Bank Nifty has an exceptional 4.8 to 5 odd lakhs of additional position. And we believe that this might be short overs, but the weighted average of these shorts are somewhere close to 45,000. Now, there is an interesting correlation between the Nifty and Bank Nifty. So if you simply look into the ratio, we are almost at 2.28, and that happens to be a very strong support because that is the annualized mean. So what I'm trying to say here is, even though the Bank Nifty has underperformed in the last month, almost 3.5% versus the Nifty 2.5%, there is a high probability that we might see the Bank Nifty inch more towards the 44,800. So I would take a counter bet with 43,500 as a stop loss. We'll be going long for a target of around 44,600 to 44,800. Needless to say, on the Nifty, yes, Nifty would be in a range bound mode, but then even now the shorting or the weighted average price of resistance would be somewhere close to 19,600. So even that gives you 150, 200 odd points. So if I see the risk reward is more on the upside, with a 100-point stop loss, Nifty also becomes a buy, but the target would be at least 19,600. Rather, I feel that today, after the market opens, there is high probability that the Bank Nifty might be outperforming. So we would not be shorting it. We would wait for a bounce. 44,800 to 45,000 is the level to go short. Now, I was listening to Anuj, and it was a very interesting thing that he mentioned. There is a fair trade between the IP and the bank which is going. So that is true because if you see at least the last 100 odd days, which is a quarter's time, the IT as a sector into the weightage of the entire market wide, which used to be around 4.8%, has come to 6%. So in the entire F&O basket, the IT stocks now weigh at almost 6%. And likewise, we believe cement, which is at 3%, there is more probability that we might see some buying into the September month. So we like a couple of stocks like JK Cement would be the top pick. We believe that can outperform, and we recommend buying in the cash market, not really going into the stock futures. With 32.90, we believe that this stock has more potential, at least 3,400 is in the offering. The stop loss of this trade should be somewhere close to 3,200. The second stock is Coal India, where we have seen good position in terms of derivative from August to September as well as cash buying. So we expect that Coal India has a potential of almost 246 to 248. 228 is where we recommend buying that. The stop loss should be close to 215 in the stock.
Okay, thanks a lot, Manoj, for that. Let's take a short break. On that note, we'll come back.